So incredible freaking opportunity is coming if you're ready. Now I want to talk to you about picking your vehicle and why I think multifamily is considerably better than single family. So I've owned over 2,000 houses that I've rented long term. Okay, I own thousands of apartment units. In 2008 and 9, I had 800 houses and several apartment complexes. And I was under leveraged. I only owed 30 cents on the dollar and I lost it all. I lost $50 million in 2008 and 9 and it was because the houses pulled me down. And so if you don't know me, my name is Rod Khleif and I'm host of the Lifetime Cash Flow Through Real Estate Investing podcast, which I'm blessed to say is the largest commercial real estate podcast in the world. Everyone always wants to go bigger. So let's get into it. Okay, so let's talk about what's happening in the marketplace, besides the fact that we're heading into some real economic pain. Not something to fear, something to get excited about. Here's the thing, we are becoming a renter nation. There are more people renting compared than owning. Rents have gone crazy. I'll show you some graphs on this here in a minute. Millennials want to rent. They don't want to get locked down. And honestly, the whole world is copying us because the whole rental market is so strong here in the United States. And of course, there's a massive need for affordable housing. Okay, so here's a graph that shows what's happened with the U.S. rents over the last 5 years. They've risen on average 18%. Now that in itself is huge, but just wait till you see what else I'm going to show you here in a minute. Now this shows the U.S. average is the black line. You got the Midwest, the South, the different areas of the country, and so, you know, but it's gone up everywhere. Bottom line, it's gone up everywhere. Now, what's really happened, it has been insane this last year, okay? Look at this graph in 2021. We have areas that in 1 year have gone up over 20%. I'm in one. The Tampa Metropolitan Statistical Area, MSA, has gone up over 20%. Phoenix, Atlanta, Nashville, where we have an asset under contract right now, 20% increase in 1 year. It's insane, okay? You know, and this is for both houses and apartments. You can see they both have trajected up and they've gone crazy this last year and a half, 2 years, okay? Now, it's going to flat. I'm going to tell you right now, it's going to flatline now because we're headed into the sewer. Here's how it happened geographically, okay? These red spots, the rent went up 20% or more in 21 and 22. Of course, you've got Arizona, you've got Idaho, you've got Texas has been crazy. Florida, of course, is nuts. Georgia's nuts. The Carolinas are nuts. Tennessee, all of these areas have had double-digit growth in rents, okay? All right. So now here's the other thing. Because of the demand for rents, it has outpaced supply, okay? And so, you know, it's projected that we need 400,000 new housing units per year. Now, actually, right now, that's how much is under construction. It's either 400,000 or 500,000 units are in construction right now. But again, we're becoming a renter nation. It's becoming harder and harder to buy a house. So rents have just gone up. But they are going to, I'm telling you, they are going to level off here soon. Okay. So what's happening? Like I said, we're becoming a nation of renters. Homeownership has dropped by at least 10%. I think that number is actually a little dated. Marriage has dropped by 25% since 1960 when I was born. That was the year I was born. Dropped 25%. So that means there's more people that have to rent. There's more singles, right? They're not married. Okay? There's very little affordable rent out there. And so, you know, a lot of people are still living at home, especially in the 18 to 23 age bracket. They're still living at home. So we've got... and this is the scary one, an estimated 12 million renter and homeowner households now pay more than 50% of their annual income for the housing, and it's gotten worse recently. So, you know, I just saw today in the news there are 20 million people that are behind on their utility bills. They're talking about shutoffs coming this winter. It's very scary headline. But again, you can get caught up in the fear, or you can just say, okay, I'm going to take advantage of this and create legacy wealth for my family, my kids, their kids, their kids, and their kids. Because that is going to be possible. I'm just telling you, everything's going on sale. So don't get scared. Focus on taking advantage of this for yourself and for your family, okay? Now, this is the difference between home prices and apartment rents. And you can see the prices of homes have gone up more than the prices of apartment rents even. Even with rents haven't gone up so much. So it's becoming harder and harder for someone to buy a home. And again, affordable housing is just a big, okay, I already said that. U.S. needs 400,000 units a year just to keep up with demand. Okay, so affordable housing is a big deal. And hopefully they'll come up with some solutions for that, because this inflation, this insane inflation right now is killing people. I mean, I see what's going on at the grocery store, and I just can't even imagine how low-income families are dealing with this stuff. The price of gas, just insane right now. And then we won't go political, but the administration just printed another $500 billion to pay off student loan debt. That's what's causing this inflation, is too much money in the system. You can't make this stupid stuff up. But, you know, so I think it's going to be pretty ugly, and there will be opportunity. If I hadn't been hiding under a rock in 2008 and 9, I'd probably be on the back of my yacht right now, because I would have capitalized on what happened back then. There's a lot of opportunity coming, my friend. All right. Right now, the vacancies are very low because there's a huge demand. But here's the thing. Here's the difference between single family, multifamily. If you have a house and it's vacant, you're 100% vacant. If you've got a 10 unit and somebody moves, you're 10% vacant, okay? And this is why I got crushed in 2008 and 9. That's why I started my podcast, to tell people, if you're gonna buy and rent property, for God's sakes, do multifamily, don't do single family, okay? Multifamily is pretty much recession proof. I would not have lost my apartment complexes back in 2009 and 10 if I hadn't cross-collateralized them with packages of houses to save a 0.5% interest, 50 basis points. So I take a package of 50 houses and I'd attach it to an apartment complex to get a lower interest rate, thinking I was brilliant. Okay, and so I lost everything. Okay, but my apartments did just fine. I wouldn't have lost them. I'd still own them if I hadn't done that, because they only pulled back about 11%. I could have easily survived if I hadn't done that. So apartments are much more recession resistant, okay? And so they're safer, especially in what's coming. Super important. Okay, also, I bought houses one at a time. Okay, I bought 2,000 of them. Okay, so I've got a little credibility in this statement. It takes a long time to do that. And so your ability to scale is massively hampered. Okay, it's much easier to buy a 10 unit than it is to buy 10 houses, or a 20 unit than it is to buy 20 houses. 10 times easier. Okay, so let's say you want an income of $100,000 a year. Okay, the average cash flow once you get stabilized is about $200 cash flow per unit per month. So $2,400 cash flow per unit per year. So you basically need 42 units to achieve your goal of $100,000 a month. I can't tell you how many students I've got that have retired from high-paying W-2 jobs doing this, okay? So, you know, you can buy a 40-unit building, and it's a whole lot easier than buying even 21 duplexes, or especially than buying 42 single-family houses. Ask me how I know. Believe me, I know, okay? So, you know, I'll never buy another house again unless it's a second, third, fourth house from my wife and I. That's it. I'll never do it. It's silly. Why would I? I'd buy multifamily for sure every single time because of what I went through and what I know. And I hope you do the same. We're going to take a break from this great episode for a word from our sponsor, which is the Multifamily Bootcamp. Now, financial success is what you're after. So if you know real estate is the vehicle for you, you're crazy not to spend a couple days with me at one of my boot camps. I've always got one right around the corner. Thousands and thousands of people have taken action on their journeys to creating generational cash flow for themselves and their families from attending my events. I don't sell anything at this event, so it's basically 16 to 18 hours of training with nothing being sold. Kind of a no-brainer if you're serious about this. To check it out, text the word links to 72345 or go to rodslinks.com. Again, text links to 72345 or go to rodslinks.com. I promise you'll be glad you came. Let's get back to it. You also control the upside, okay? If you buy a house, you cannot increase the value more than what the comparable sales have sold for, what other houses have sold for. That's not the case with commercial multifamily. With commercial multifamily, every dollar increase to the net income is an exponential increase to the value. It's about 17 to 20 to 1. Okay, so you know, every dollar you increase that net income is a $17 to $20 increase in the value. I'll give you an example of this. I've got an asset in San Antonio, and the property manager went and visited the units doing a fire inspection, and she discovered that there were about 60 people that had pets we didn't know about. And listen, we love pets, but you got to pay a little extra for that. It's $20 a month. It's not brutal. So we assessed those 60 people $20 a month for those pets. That is a $400,000 increase in value. $400,000, okay, just by that. So again, this is why we like multifamily, because every dollar you add to the bottom line is an exponential increase to the value. So you control the upside. Again, houses are based on comparable sales. 5+ units is based on the NOI, which is the net operating income, which is something you're able to ramp. You're able to force appreciation. Okay, I'll give you another example. We've got a 101 unit asset in Dayton, Ohio, in Beaver Creek, Ohio. Yeah, 101 units. 3 months after we bought it, it got destroyed by a tornado. True story, okay? It's blown away. I mean, all 101 families had to move. Thank God nobody died. We had a couple people had to have surgery. They're okay, but thank God no kids got hurt either. But 101 families had to move. We were able to raise the rents there $600 to $650 a month. That is a $12 million increase in value. That's why we like this business, okay, guys? All right, so again, here's an example on the slide deck. If you increase rents $20 on a 100-unit building, you've increased the yearly NOI, net operating income, by $24,000 at a 4% capitalization rate, $600,000 increase in value. I just gave you an example just like that. Again, that's why we love this business. Here's another reason we like multifamily, because you can outsource the management. Okay, when you have a larger multifamily property, like I would say 30 units or higher, it allows you to hire an on-site manager. Okay, at least part-time, even on a small one like that. On 70 units or higher, you can hire your whole staff. But there are very good third-party property management companies for these larger multifamily properties, okay? Now, good property management companies for houses and smaller, like duplex, threeplex, fourplex, very hard to find because they're typically a broker that's doing it on the side. They're not sophisticated, and you'll blow through a lot of them if you're buying smaller property like that. But if it's moderately larger, you can get great companies to manage it for you. So you can buy property anywhere in the country. I've got assets in Ohio, Cincinnati, Dayton. I've got in Texas, San Antonio, Dallas, Houston, Atlanta, South Carolina, North Carolina, Florida, Tennessee, Kentucky, Louisiana. So you can do that because you can find good management companies. Okay. So it becomes, when you buy multifamily, it becomes much more passive than buying smaller stuff, okay? And so, you can literally, I talk to my management companies once a week for an hour. That's it, on each asset. That's it. That's all we have to, okay? Financing is easier, okay? If you buy 20 houses, you got to work with 20 different lenders and appraisers, and it's a lot of work. On a 20-unit building, you only do it once. Now, here's the other thing, okay? With a commercial multifamily, which is anything over 5 units, they're going to look at the team, okay? They don't look at you personally. They look at the team. And if you've got somebody on the team that has a big net worth and some liquidity, that's what they'll look at. They'll look at the team's net worth and team's liquidity. And so, and the team's financial fortitude. The other thing is they are looking more at the property's ability to service the debt than the actual people that are buying the property. They want to make sure that property can sustain the debt. So, So it's actually easier to buy a multifamily than it is to buy a house. It is. It's easier. Okay. And single family homes are much more expensive to manage, as I just described. Again, I had 800 of them here, 2 hours south of me, 2 hours north of me, and everywhere in between. And what a nightmare it was. Okay. So it's very difficult to cash flow on single family houses. I'm just going to tell you that. I didn't cash flow on my 800 houses. I just barely broke even. Okay, because the maintenance was so expensive. Taxes here in Florida are expensive. I had properties in wind and flood zones, so the insurance is more expensive, all of which impacts cash flow. Okay, so very difficult to cash flow. Okay, now again, multifamily is designed for easy management. It doesn't matter how many it is, it's just easier to manage. You can have an on-site manager that shows the units, can be the face of the property. It's just easier, period. Okay, multifamily is designed to lease easier because everything's in one location. You can have somebody there that shows the units. Okay, versus like we had 2 hours north of me, 2 hours south. It's a pain in the butt to show houses that are an hour, hour and a half away. Massive pain. So this makes it's much easier logistically to manage. Okay, maintenance. What killed me when I had my 800 houses, if I sent someone to one of my apartment complexes, everything is the same. Plumbing parts, appliance parts, HVAC parts, window locks, door locks, everything's the same. So we could stockpile parts. Maintenance guys in and out in an hour. If I had to send them to a house that's an hour away, they have to go see what's wrong. Every house is different. Then they have to go find a Home Depot or a Lowe's where we have an account, which could be another hour round trip. And I don't know about you, but when Rod tries to fix something, he ends up going to Home Depot more than once. And that happens with maintenance guys as well. And so what took an hour at one of my apartment complexes took all freaking day at one of my 800 houses. Okay, that killed me. So again, maintenance is much easier with the multifamily. I hope I'm convincing you to do multifamily, not single family. Now here's where it gets really interesting. Try to sell a portfolio of houses. Very difficult, very difficult. Ask me how I know, okay? It's impossible to finance. There's not as many buyers. You know, you'll likely sell them one at a time. Again, ask me how I know. This is all stuff I went through. It's a pain in the butt, okay, versus selling an apartment complex. Happens like that. Incredible tax benefits, okay? There's frankly, the tax benefits go for any real estate, but you're able to cost segregate. Right now, there's bonus depreciation. If you own real estate and you do it as your livelihood, you won't pay taxes. That's just the beautiful thing about this country. You don't pay taxes if you own real estate. You have all sorts of tax deductions. So, get into real estate, whatever you do. Trust me on that. Now, again, like I said, it doesn't matter what your personal financial situation is. They're going to loan based on the team, and you can bring in what's called a sponsor. I've sponsored probably about 4,000 units in the last 4 years where I get involved and bring my financial net worth and so on and so forth to the deal. And again, the loans are based on the property's ability to service the debt. Okay, how well the property performs, not you. They're not interested in your income, they're interested in the property's income. So again, remember this, same amount of work to buy a 50 unit as it is to buy a 5 unit. Why wouldn't you go to 50, okay? You can also syndicate, where you pool people's money together to buy it. I'm raising $18 million right now for a deal in Nashville, okay? I have students I think my students are somewhere in the 80 to 90,000 units owned range that we know of, and I've only been teaching 5 years. So, I'm really proud of that, okay? But again, because they're higher and more stable and conservative returns, you're able to pool investors together in a syndication or in a joint venture and take down these larger properties. Now, if you're going to wholesale, the numbers are staggeringly different. I pinged my warriors, which are my coaching students, my mentorship students, about a year ago, and I said, how many of you have wholesaled a deal and made over 100 grand? 12 of them had. 2 of them made over $1 million, okay? Typically on a house, you might make $2,500 to $5,000. The average apartment wholesale is over $10,000. But I just told you, I had a dozen that made over $100,000, okay? That's why we love this business. Okay, seller financing is just as common in multifamily as it is in single family. And I'm going to tell you, you're dealing with investors, not homeowners, so they're more receptive to it. If they own a property, a multi-unit, they're an investor. They're not just a homeowner. So, very often they'll want to finance and maximize their returns and lower their tax liability. And so seller financing is an awesome solution for that. I helped somebody buy 500 units. Joe buy 500 units with seller financing. It was like 3 deals. Coached him through it. So I hope I've convinced you that multifamily is better than single family. Listen, I have boot camps coming up every couple of months. Financial success is what you're after. So if you know real estate is the vehicle for you, you're crazy not to spend a couple days with me at one of my boot camps. I've always got one right around the corner. Thousands and thousands of people have taken action on their journeys to creating generational cash flow for themselves and their families from attending my events. I don't sell anything at this event, so it's basically 16 to 18 hours of training with nothing being sold. Kind of a no-brainer if you're serious about this. To check it out, text the word links to 72345 or go to rodslinks.com. Again, text links to 72345 or go to rodslinks.com. I promise you'll be glad you came.